Hey, boys and girls, welcome to another episode of LendAPI Partner Podcast. And we have a great partner today, Matthew. And I know Matthew for a long time, Matt for a long time. He's done a lot of different things. I feel like I'm just following his footsteps from his podcast journey, his blogging, his entrepreneurship, founding multiple companies. We're going to talk about his latest creation and all of the teaching he's been doing in colleges and universities around the country. So, Matt, welcome to the show, and it's a pleasure to have you.
Tim, thanks so much for having me. And yeah, it's funny. We've known each other, I think, since my TransUnion days, when you were a customer at one point. And
My God,
yeah,
yes.
and
Um,
I think we traded discussions around entrepreneurial journeys and data and
yeah,
analytics and like all the,
that's right.
and the importance of bringing all this stuff together. So looking forward to having a
Yes.
discussion.
And it is rare to have somebody that studied econometrics, statistics, probability, mathematics. And when I met you, we were back in TransUnion, I don't know, 10 years ago,
Probably, yeah,
maybe 15,
at least
approaching
10, at
15.
least 10, maybe more.
At least 10. It was good to meet somebody that sort of really understands what they're doing in terms of analytics, model building, things like that. 10 years ago, that was before big data,
Oh
right?
yeah, I
We
know.
were we were just like trying to do what we have, and everybody's trying to go online and things like that. So let's go all the way back to your college career. You know, a lot of students nowadays, and I teach a little bit on the side, don't know what they're doing. They're massively confused with all this AI stuff. But I still feel like, people still learn the fundamentals and things like that. So
Yeah.
as a college student back in the days, as a professor now, what kind of advice do you give to the youngsters nowadays, right?
Yeah, I would say first and foremost, right, don't necessarily lock yourself into something too early because I think, there's so much opportunity today to really understand what you want to pursue individually and what's available out there,
Right.
and what's relevant in the market. Like I started my college journey in industrial engineering. And
Yeah.
I actually,
Same.
you did too? Okay, yeah.
Same.
Yeah.
IEOR, Industrial Engineering Operation Research.
Yeah, and I actually struggled with a bit, and some people don't know this. I actually failed out of school, worked
Mm,
really hard to get back in,
okay.
and had the good fortune to take an economics class as I was getting back in, back into university. I went to community
Right.
college for a year and busted my hump to get back in.
Mm,
And that economics course actually changed the entire trajectory of my career because I first realized industrial engineering wasn't necessarily for me,
right.
and I found that I loved economics and econometrics and
Okay.
understanding how this theory actually tied into what we see all around us on a daily basis.
Right.
And I was very heavily into mathematics at that point, and so because I had
Sure.
taken a lot of math, I actually decided I majored in economics and then minored in mathematics,
Right.
and it was
Couple more classes,
yeah,
you get a minor.
exactly. And but I got into game theory, and so
Sure.
it wasn't so much the industrial engineering kind of curriculum was great for what it the purpose it had, but I
Sure.
figured out through that journey that industrial engineering as a career wasn't necessarily for me. And
Right.
so it was fortuitous, but it shaped
Yeah.
the entire trajectory of the rest
Yeah.
of my career. And that's why I say to folks, if you're not sure of what you want to do, that's okay. Because,
Yeah.
you know, um, I thought industrial engineering was my path. And I luckily
Sure.
also worked internships that first summer. I was actually working in a wastewater treatment plant.
Okay.
They were creating wastewater pumps, and so I worked on the floor. I redesigned their entire kind of build process. And so I actually got very hands-on experience, and it helped me realize
Sure.
like I'm not so sure industrial engineering is my path. And I
Yeah.
wasn't doing great in school with it. There were just components of the engineering curriculum that it didn't
Mm.
work for me.
Yeah.
So
Well, I finished. my IE degree, if we can talk about
Yeah,
this a little
yeah, of
bit,
course. Yeah.
from San Jose State University, and I went on to do more industrial engineering stuff at the University of Southern California. Um, my my takeaway from that, I interned at Toyota Financial, not Toyota Financial Services, Toyota Manufacturing
Yeah,
Motors, building trucks, right?
right.
And worked at TSMC, Seagate as interns and co-ops, right? I was doing all that stuff as well, not in the water treatment plant, but it's very similar
Yeah,
kind of an industrial setting. Lots of manufacturing, although I was in the Bay Area, so it was pulled into more of that clean room
yeah,
manufacturing stuff.
yeah,
Um, but they preached systems thinking. They preached simulation. You got to simulate the entire floor using computers
yeah,
programming.
yeah,
And that really sort of sparked, and there was a good amount of statistics and probability because we had to calculate quality
yeah,
assurance and all that stuff, right?
exactly.
And then there's the computational sciences perspective because we had to take some operations research classes. So so I feel like maybe inadvertently or in some kind of subconsciously, um, it probably set both of us up for entrepreneurship because you got to
Yeah,
think about everything.
exactly.
Uh, you know what I'm saying?
Exactly.
And then your econometric studies and math probably fuse all that together. You probably was more of a savant mind
Y-
minded
y-
numbers kind of a theory guy.
Yeah.
Than hands on. Oh, that actually makes sense if I put it all together. Conveyor belts and robots and stuff like that.
Well, it actually, I mean, if
Um,
you think about it, right,
yeah.
to your point, systems are foundational to both industrial engineering and industrial processes, but as well risk management, right? So
That's right.
process and systems are foundational to risk management and
Right.
lending, and right, making loans,
Yes.
right? It's very systemic and there's process,
That's right.
and so
That's
it
right.
translates actually pretty well. I just didn't
Yes.
realize that my passion wasn't necessarily in industrial, it was more in finance. And so
Yeah.
I was fortunate to my first job was with Household International as a credit analyst. So it was like, okay, I want to shift this focus and see how I can maybe apply in a financial
Yeah.
setting, right? And then I quickly went on to get a master's in statistics because I
Right.
just found this
Right.
passion, right?
Yeah. I think you're the third or fourth person this month that has mentioned household.
Really?
I just had somebody in my office yesterday that did some work at household. Uh, Steve. Anyway, but you know Walt Ramsey by
Oh,
chance?
I worked in Walt's organization. Yeah. That was,
Okay.
yeah, he was like the godfather of unsecured personal loan risk, you know.
His head is getting bigger
Yeah, I
now.
know, I
I
know.
can just tell.
Yeah. Well,
Okay, we'll give him a
Walt,
special
yeah,
sauce for Walt.
Walt's great. And um, it's so interesting because when I first got to Household, I didn't totally understand all of the um, great risk management practices, and it came in later in my career when I moved on to actually
Right,
TransUnion for the first time, where I met a lot of other fellow household people, and they said, household really helped kind of set the framework for understanding risk management and
right.
helped you cut your teeth in the right way.
Yeah,
And there's been, I've known quite a few people that were in the household age, but then also HSBC after HSBC
that's
acquired
right. Yes.
household. And I mean, it's just amazing, just the number of people I know even today that came out of that organization that,
Yeah.
just have that solid risk management background and understand. I actually think household was kind of ahead of the curve at that
Mm-hmm.
time, right? Even though we, and it's probably hard for some of the younger folks coming through today to understand kind of how we used to pull data and process data, and you
Oh
know
my.
and even right before I joined, they were doing scorecarding by hand. Like they had
Uh-huh.
hand built
Yes.
scorecards, and the loan underwriters were hand scoring consumers, right?
Yes.
But
Yeah. Do you know a Stephen Hodgson by
oh, that
chance?
name sounds
He,
familiar, but I do not know.
I think he worked there, and he was telling me a story yesterday in this chair in my office about hand doing the scorecard keeping the Fire Isaac folks in line. What
Right, right. Yeah.
and he was a young buck, but I could tell. I mean, he's probably in his 60s, 70s now, right? He's got a great appreciation out of that shot, just like what you're saying too.
Yeah, I mean it, and I had some really great mentors through that. I actually, what's amazing is I actually am t in today's world working with a lot of those folks again. So they've
Isn't that
they've kind of
crazy?
shifted into the fintech world,
Yes,
and
yes. You understand
yeah,
me, you
yeah, exactly.
know?
Well, what's really cool is it's bringing that kind of old school mindset about risk management
Yeah,
into
yeah,
this technologically advanced world where you
yeah.
can compress the time between idea and
That's right.
execution, and the ability to measure results and actually have meaningful impact has condensed
That's
so
right.
significantly. It's mind blowing,
Yes.
right? So
Yeah.
things that we might have dreamt of in those older days, it's like possible today.
Yeah.
And
I
yeah,
remember Walt even 15 years ago. Why the fuck does it take so long to get this data together? Just three, TransUnion, ideology,
right.
ID analytics, and clarity services
Just
slammed
bring them
together.
together,
Primary
right?
key. Yeah, just put them together
Right.
because we need to do modeling. We
Yeah.
actually need to do the real work.
Right. Right.
My God. But talk to me. Let's nerd out on risk-based pricing because I feel like households and HSBC households certainly sort of was like you said ahead of the curve, and that's where a lot of experimentation was done around risk-based pricing,
Yeah.
and a lot of younger folks or even pros may not know the story there.
Yeah. I mean,
Uh,
so it's interesting because and it wasn't just in the risk-based pricing, but we were doing experimentation across acquisition campaigns and
right,
understanding price elasticity, right? And where would the consumer be willing to take an offer versus not?
right,
We were testing along the whole curve of response, conversion, and pricing to
right,
understand, right? Like where, and I mean, we were like cutting mainframe files and like doing randomly controlled experiments through SAS
right,
programming. And then,
right. SAS,
right,
my
yeah,
God,
we were using,
shout out,
yeah,
yeah,
yeah, exactly. And we
yeah,
would create like mail drop files, and then we would often do it and then load it into our origination systems.
right.
Um, it,
The ethos of everybody should get an offer.
yes,
Everything can be priced, right? That was like the headline there. I
yeah.
feel like I never worked there, but I feel like that's
No, that
what was
that was the
happening.
mindset. It was that, everyone can get an offer, and of course within state regulatory guidelines, or federal,
Of
of
course,
course,
right?
that
Yep.
goes without saying. But the goal was always we want to serve as many consumers as possible,
Right,
right? I mean,
right.
I can remember, so household, they acquired Beneficial right before I joined, so in like late 90s. Beneficial was
Yep.
also kind of a big branch network. I mean, at that time, they each had probably 15 or 1600 branches across the country. And
Right.
so it was still this mix of handshake deals, kind of people meet, there was like this relationship building
Yep.
within a branch, but then we were trying to create centralized, sophisticated risk management, analytics,
Right.
technology. And the
That's
minds,
right.
right? I mean, I can remember at one point we were processing somewhere between like 120 to 150,000 applications a month, you know?
That's
Yeah,
insane. That's insane.
right.
Back in the early 90s.
Yeah. I mean,
And I think a lot of that was like paper applications that people fill out and send in,
oh
right?
yeah, yeah. They were
Yeah.
filling it out, and I mean, I think it was probably what the early days of like we did live check campaigns, right? So that we literally would
Oh,
mail people what was
right.
called a live check, and it was basically they could go deposit that check, and then it established the relationship with
Right.
households or beneficial.
Sure.
But think about the risk involved with that, right? You're basically giving
That's right.
someone free money and they may never
Yep.
pay you back
Yep.
again.
Yep.
And those
People are still doing that today.
today, right,
Today, people are still sending out live checks.
right, right.
Today,
Eh,
right? Anyways,
Yeah,
yeah.
it's amazing.
All I remember was I had a household or HSBC Best Buy card
Yeah, yeah,
as a youngster
right.
and an MBNA starter card.
Yes. Yeah.
There were the two. I'm
Agreed.
like, wow, somebody's loved me enough to give me a credit card. Look, mom, you know.
Right. Right. Well,
But that
that
was
was how you started building credit though, right? I mean,
right, exactly, right.
until the Card Act, of
And
course,
yeah,
but
yeah. Okay, let's talk about this,
yeah,
right? My last conversation with the guy from the SVP of Truist, we kind of mentioned. Oh, not, no, actually, with the co-founders of RAI Partners, is a QSO, great QSO that does credit cards. We mentioned the 2019, 2020 Credit Card Responsibility Act,
yeah,
which is the Card Act.
yeah,
What is going on? It's been uh, uh, 20 years now since the Card Act.
yeah. I think was it '09? I think it was '09.
Yeah,
Yeah.
no, more than, yeah. So yeah, 17 years. What happened to Card Act? Who was charging people an insane amount of fees that triggered that
Well,
Card Act?
I think what ended up happening, right, is,
Yeah.
and if you remember at that time, as you mentioned, like the MBNA card, or, I mean, Associates, right? Associates
Yep.
was one of the original
Capital
Cap
One just
One.
getting started in this whole game.
Yeah,
Yep.
I mean, there was, the mass marketing on college campuses. I mean, I know that's how I got
Oh
my first
God.
card.
Oh, American Express,
Yeah,
the blue
yeah,
card, that looks so shiny and fancy.
right, right. Well, I think, the Card Act was intended to really help prevent, kind of consumers getting taken advantage of, right?
Right.
But I think what it probably did is it helped spur innovation around things like buy now, pay later, and right, because if a consumer didn't have as much or easy access to credit as
Right.
previous, now
Right.
the fintech, and what's really interesting is just after that, or right around then, is like when the Prospers and lending clubs were starting to get going, and the fintech
Yep.
boom kind of happened right then. So I
Yeah.
think what the fintechs identified was, look, consumers still have a need for access to credit, even though it's not in a revolving vehicle. We can
Yep.
provide it in an unsecured personal loan. And we saw the advancement of analytics, more data, the ability for these fintechs to actually make much more sophisticated decisions on consumers. And so you pull all that together, right? And while the Card Act might have kind of lessened the ability for card issuers to play ball, it kind of
Right.
opened this whole different funnel, right? And so, yeah, I mean, the fees component was definitely a big part of it, and it was intended to protect consumers. Um, but at that time, there wasn't some of these distinct, I would say, kind of players in the subprime space. I mean, you had
Right.
Associates, you had Cap One getting going, um, but
Hmm.
but
And
yeah,
the political backdrop of 2008, 2009,
and the financial crisis,
was
right? I mean,
conducive for,
yeah,
yeah, it's like, oh, while they're down, let's let's do more,
right.
right? So there was a lot of Ron Paul styled sort of consumers protection act that came out of Dodd-Frank.
Right.
Rest in peace, Senator Frank.
Yeah.
He passed last week. And let's protect everybody and not give birth to CIPB. If we
Yes.
really go to history around that same era.
Right.
Um,
Right. And
you know,
I'm a big believer in, so I love, when regulation is done well. So,
yeah,
and you can't say that an overhanded regulatory regime generally creates less options for consumers. And so if you create the right framework, and companies understand that framework and can operate within those
right,
guardrails, it actually can create and spur innovation and allow for
that's
consumer
right.
option, right? And so everybody
Yeah,
wins when that happens. It's challenging when you try to force product design and constructs around unit economics into a specific regulatory box, right?
yeah, right. And like we say that government has nothing to do with, shouldn't be regulating interstate commerce, protection, regulation of some sorts that doesn't produce harm to consumers. That's one thing, but
Right.
coming in and say, well, you're of a certain scale and therefore your interchange rate is X, Y, and Z.
Yeah.
Yeah, that's I get what they're saying, but you're punishing people for being successful again.
Right.
And a lot of banks are trying to fly under that $10 billion radar, and it's just really hard to do business.
Right.
But anyways,
Yeah, that's a whole,
you
that could
know,
be a whole other podcast,
that's a whole
but
series.
it's important, like when you think about kind of innovation, because
Mhm.
that's what helps spur economic growth, right? That's what helps fuel economies,
Right,
is
right,
innovation and allowing for people that are creative to be able, and what you don't want to have happen is you create a regulatory environment where people are then sidestepping things and creating actually harmful type
hmm,
situations
yeah,
for consumers, right? I mean,
yep,
free market economics is great in concept, but in reality, there's always imperfect information.
yeah,
And so, it's a delicate balance, right? So,
yeah,
but it does
yep,
play a part in how we think about risk management.
yes,
How do you maximize profitability? How do you ensure
right,
that you're doing right by the consumer but also, and providing a needed service. Like the reality
right.
is, if consumers didn't demand for credit, none of these companies would exist. So
Yeah, the demand's always there.
yeah,
And back on regulation a little bit, all of this conversation about using crypto yield to pay to use as a rewards program,
yeah,
on one hand, I understand. I mean, if there's a perceived value or a creative value, some of that should be um, usually incentivized. But there's a spiraling effect if
yes,
you start doing that, as opposed to taking a real portion of economic process and give that portion back as a rewards program. There's a lot of that stuff needs to be perfected,
right,
but that's
right,
yet to be seen.
yes,
Um, well, like I'm on a good day, they let me do a little bit of lecture at universities, local universities. In fact, after this, I'm going to UC Irvine to do a little bit of pitch at their fintech class.
oh, very
Isn't that great?
cool.
This college can have fintech classes.
I love it.
Um, you taught and taught and taught and taught. You're doing that right now.
Yes.
First of all, I don't know how you find the time. Secondly, what what do you derive out of teaching? Because I know it doesn't pay anything. So
Yeah,
tell me,
yeah.
Matt.
Well, something I kind of figured out early in my career, and it was actually my first stint at TransUnion when I started consulting. It was I was getting a lot of joy out of imparting knowledge on people.
Okay,
And so, and actually watching the process of someone learning something that I had spent a lot of time trying to master and perfect and, get right, just even if it
right,
was a small piece of that a student could get, and to watch that transition, from
right,
like, this is really tough to, oh my gosh, I get it. um, like, to me, that brings me a lot of joy. So I think, and I didn't really realize it kind of early in my career until I went to TransUnion and I started consulting, and I was doing the same
right,
thing for clients, which is kind of what brought me back to consulting in the long run.
right.
And
Yeah.
I think another piece of it is I've been very fortunate. My father has always been a huge proponent of education. He's actually,
Okay.
yeah, he's taught for 30 years. Like, he always did it as a second job for many years to help get my
Mm-hmm.
sister and I through college. Um, and he developed this passion for it. And he actually ended up going back for his PhD in his 50s. And so it was kind of this innate kind of thing that he had that he passed on. And
Wow.
it's interesting
Yeah.
because even my sister teaches as well. She actually just got her PhD in education. So
Oh wow.
yeah, it's just this value that, I think was ingrained in me early on, but then I got to experience myself in education, helping people kind of understand and bring that new
Right.
knowledge to them. And so,
Yeah.
I've enjoyed it over the last 20 plus
There's.
years, and it's been pretty
Oh
great.
wow.
Yeah, yeah, I've been doing it for
Wow.
20 plus years at this point. And
Yeah.
but it's also, it's interesting because it's translated into a desire, for example, with my current business, to work with universities, um, develop training pro. So I've been working with an industry colleague, Frank Tian. We've developed a risk management training program to try to bring
Yes.
into corporate environments. I've been working with universities, and as you mentioned, there's a lot of fintech programs now. And so we've been approaching these
Right.
folks with fintech
Yeah.
programs to say, would you like as an add-on maybe a risk management course to give folks an understanding of the practical application of
Right.
what they're learning in these fintech curriculums and how it translates to the real world, right?
Right. I should introduce you to Professor Jinfei Shen at UC Irvine, economics finance professor, and he pioneered that fintech class I'm going
Oh,
in about
so
a
great.
year.
Yeah.
Yeah, you guys should talk. And I review Frank's book
Yeah.
on our website.
Yeah.
It's very well written, and it feels like this conversation. Well, I can compare myself to the knowledge of Frank, but it all made sense to me. Every chapter, I was like, "Wow, that
Oh,
makes sense. This is what
right.
it actually makes sense." So,
Right. Yeah.
it was a great book.
Yeah.
Yeah,
Frank's great. I mean, he just has a great understanding of, risk management, lending, and we've been partnering. So he's created the course. It's all based out of the book, and the course
that's right.
content is kind of derived around that. And then,
Yeah,
OGMA is the delivery partner, so we're there to
that's right.
help do the delivery. So,
Right.
I think I don't know. Like you speak to so many different people, but I feel like there is this hunger for knowledge and training, and whether it's a virtual setting, in person, whatever the case is, I still feel like amongst professionals there is still a hunger for
Yeah.
kind of that learning.
You, we we you're absolutely right. We talk to a lot of folks. Maybe I mean we can make a deal on the show. Maybe we can sell 1 hours of course through our contract.
Yeah,
Hey, if you sign with LendAPI, you get access to Matt
right.
and whoever, and they'll set you up with the 1 hours of a just to knock down dragged out fintech or risk management 101,
Right, right.
right? Because there's 20 different plaids now. God bless plaid. 20 different TransUnion now, right? There's
Yeah,
people are people were okay 10, 20 years ago. Oh, I'm going to use this credit bureau, this identity verification services,
right.
right? This online whatever monitoring, open banking. Now there's like mass confusion. What do we do? God knows we have like 120, 200 different partners on our platform,
Right.
so they can pick and choose. But what do they do? What do they know?
Yes.
And it's just a hodgepodge of sales process. I think all of our clients will benefit from your program. Before we get into OGMA, there's a lot of confessions on this podcast. I wonder what that conversation was when you dropped out of college with your father.
Oh, that was a tough one. That was a tough one. Yeah, my parents were not too happy. We'll just say that. We'll just say that. Um, but it was kind of an epiphany moment of like I need to change direction, and we had very transparent discussions, and look, luckily my folks very much supported me along the way, and they said, look, we know how important education is, so we're going to help you figure this out, and so they were there every step of the way to say, look,
Mm-hmm.
you gotta buckle down, and we'll help support what you need to do in your decisioning. I mean, we were meeting, it was like over that summer after it happened, we were meeting with the deans of different schools to figure out what's the best path back in. How do we go? Because the reality was, I let a little bit of fun get in the way of my education.
Mm-hmm.
And
For
that,
sure.
and that was
Yep.
my reality. And, I knew that I had to change direction, and so luckily
Sure.
I was able
Yeah.
to. Um, and so yeah, the initial reaction, that it was not so happy, but again, they were supportive the whole way, so it
Wow.
really helped me feel good about, look, I can make a course correction, and I didn't do it too late, and so that was
Yeah.
kind of a fortunate kind of place to be. And I know, not
Yeah.
everybody has that fortune or has that kind of support, right? So look for it wherever it is, right? Whether it's friends or university professors, or it's really about when you're in that place to reach out, right? And figure out a
Wow.
path.
Right. What a great story. I grew up in the Asian household.
Yeah.
That conversation would have been,
Yeah.
first of all, look at what your sister has been doing.
Right.
You bring shame to the
Yeah.
family.
No, exactly.
Why aren't you a doctor yet?
Yes, no, exactly, right. And my background, my family is Irish and Italian, and
Oh, it's hardworking,
yes, very hardworking.
fundamental
Yeah, yeah,
people,
no, exactly. So that's why it
do
was
an honest day to work.
exactly, and it was and luckily I had very good role models in both my parents that like, okay, if I'm going to course correct, I have the roadmap. It's just a matter of
Mhm.
making the decision to do it,
Right.
So,
Wow.
yeah,
Well, risk management and what you're doing today, risk management, I feel like is all about second chances,
yeah,
just like what sort of you've gone through in the college career. A lot of clients come to you. I can just imagine now, Matt, we tried a bunch of stuff
yes,
and
yes,
it didn't work.
yes,
No offense. Help us, what can you do, right? So a lot of people are looking for a quick fix, but there aren't really a lot of quick fixes. So, I mean, there might be a couple of things you can add immediately.
right.
What are some of the conversations like between you and your client? Um, Give us some patterns. I'd love to learn more about that.
Yeah, so I mean, you definitely started hitting the nail on the head there because a lot of times well, I would say it's like one of two paths. One is, yes, we've been trying these different things. We're seeing losses continue to deteriorate or delinquency deteriorate. Our approval rates aren't where we want them.
Right.
Or we often, have clients that say, we want to make this transformation, but we don't necessarily know how to go about it.
Sure. Yeah.
Whether it's we're currently doing a lot of lending storefront, we want to move to digital, or
Right.
we want to move into a new product space, but we don't know how to go about that.
Right.
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 Or we want to expand our universe, right? So we might
Right.
currently lend in prime only, but we want to expand to near prime. How do we
Right.
do it?
Or redo their direct mail campaign, maybe.
Redo a direct
Yeah.
mail
Yeah.
campaign, right? How do we tap into this other universe that we haven't been lending to?
Right.
And
I've heard that, TransUnion is going to give us another 20, 30% additional universe,
right.
but how do we even get there,
Yes. Yeah. So
like that.
so that's a lot of what we hear on a day to day of, hey, we
Mm,
want to do different things. We want to innovate. We want to get cutting edge with our credit scoring.
right.
How do we do it? Right. And it's not, what's interesting is a lot of the times it's not that people don't have the like capacity or capabilities. It's they just haven't done it, or they,
That's
right.
right.
So part of what we try to do is we want to leave the clients in a place where if you want to continue to use us to help support, we're there for you. But also we want to create a learning environment, right? So bringing back the teaching, we
Right.
want to hand off things that ultimately they as an organization can take forward and be able to do themselves. And that
Hmm.
might part of the recommendation might be, hey, you need to hire a few more data scientists, or you
Right.
need this level of management and risk
Right.
to help drive this forward for this to be ongoing, because
Right.
in your current environment, you can't do it just based on everybody's stretched too thin, or you don't have
Right.
the right skill set internally. Those are some of the gaps we help identify as we work on
Right.
projects or are engaged
Right.
fractionally, because we have a lot of different models that we provide. So, we might provide a fractional, chief risk officer, analytic officer on demand, or kind of a risk department on demand, so they can tap into us
Right.
as they need us. And, in some cases it's just project based where they're like, we know we need X. And so help us with X.
Right.
So
Right.
it just kind of varies.
Yeah. Um, we sort of work in the same field from a technology perspective. I feel like I'm old and jaded. I feel like what was broken 15 years ago is even more broken today.
Yes.
Just hearing the last minute and a half of a narrative, I feel like nothing has changed.
Yeah.
People still need help. As much as we have AI. Somebody else said on my one of my social posts, AI gives you answers, but experience gives you perspective or give you judgment, if you
Yeah.
will.
Yeah.
Right? I think people still have a lot of anxiety and say, what, AI is telling me all of this. It's almost like going to the doctors. I went to a WebMD. I should use this medication, but is this
Is this
okay?
okay? Yeah. Is this
Is this
legit?
okay to put on myself self-medicating? Um, I feel like so much more education needs to happen I'm glad you and Frank sort of partner up with this stuff. Um, Gosh, I mean, like, we certainly talk to a lot of you know entrepreneurs in their 20s and 30s. They don't teach us this stuff in universities,
Right.
because we kind of, right? They just don't. And I had the pleasure of sort of working with Wal Ramsey
Yeah.
at JP Morgan Chase when it was at JP Morgan Chase, and he taught me some of the stuff that sort of you learn from him from that whole camp as well. And I was lucky, and I was just one of the couple of guys that he took the time and sort of told us a couple of things here and there, and the rest of it we had to figure out ourselves. What's going? I mean, I guess I'm trying to reach for a point. I mean, like, what do we need to do to get this knowledge out even more?
Right.
And it's nothing scary. I tell people it's just a lot of times it's just common sense. But if you haven't heard it, you haven't heard it.
Right. No, exactly.
You
And
know,
AI will only close the gap so much, right? Like, because without the
yeah,
knowledge, you don't know what to ask, or you're not sure of how do
right,
you check the answer and make
right.
sure.
And AI is always trying to coax you, right?
Yeah.
If you do the wrong prompt, oh yeah, great idea, this and that, and
Yeah,
this, right? I
right.
was like, okay,
I'm gonna run
so
with it. Yeah. Um,
right. And yeah, and yesterday I was on the phone with a VC, and they were saying that AI, you know, AI could replace some of the stuff, but these highly regulated industries like the one we work in,
right.
it can't touch. I mean, we can build AI tools ourselves to make it because we have the knowledge to do it.
Right.
Uh, what are your thoughts in these highly regulated? If you do something incorrectly, we kind of talked about the card acts and all that stuff. What happens to you if you inadvertently sort of, God forbid, discriminate a certain protective class? What could happen?
Right. Well, yeah. So now you've got legal liability. You've got uh, potential lawsuits, right? That, and I think, it's interesting because it actually brings up a whole area that we're starting to focus on, which is AI risk. And it's
Right.
understanding, right? If you build out your risk register correctly and you
Yep.
understand, okay, what's the probability of something going wrong with maybe instituting an AI decision within a lending environment, and what the
Right.
implication and the impact of that is, maybe we're going to pull back a little bit on how much we're using it, right? But I don't,
Right.
what I'm seeing is I'm not sure if people totally even are wrapping their head around that yet, like in terms of what that potential domino effect is. To your point,
Right.
like if we lend to, discriminate to a protected class, what does that translate to, right? And do we have the tools in place to understand if we actually did it? Like, how long is it going to take to get caught potentially,
Right.
right?
Yeah.
Because if you have audit process in place, and an underwriter were to do it, and you're doing fair lending review, and you have all those things set up, you should catch it pretty quickly. Have
Right.
you have you updated your systems to ensure that your
Right.
AI decisioning is up to date? And so I think there's
Yeah.
a lot of question around that, and I'm starting to see a bit more on the governance side of things crop up with regard to AI, and I think it's
Yeah.
going to need, regardless of where the regulation sits, I think companies just need to um, be cognizant of these things because of the fact that,
Yeah.
right, even without regulation, you could be in violation of FCRA, ECOA, already, standard laws and regulations with regard to lending that you don't
Right.
want to fall out of compliance with,
Right.
right?
Right.
So I think some of the dangers are people are trying to move at the speed of light in doing some of this, but that's where a lot of times we'll come in to say, let's pause and let's
Yeah.
determine, right, like what are the potential risks you are now introducing to what you're doing by
Yeah.
some of the AI.
Yes.
Yeah.
Beyond the math, I think people are using AI to even come up with these direct mail creatives,
Yeah. Right.
and and that could have all sorts of even FTC sort of violations
Yeah.
about saying certain things on these pieces that are supposed to be governed by all sorts of alphabet soups that you just
Yeah.
mentioned.
Right.
Um, it's more than math,
Right.
in some senses. Wow.
Well, that's why, so
Uh,
our company motto is driven by data, guided by experience. And so, as you
Okay.
pointed out, right, you still need to have the experience layer that's in there to help drive kind of all of these decisions and moving innovation forward, in kind of a risk mindset way. And I think,
Right.
those are the things we're trying to impart on our clients as we continue to work with them.
I was on your website, OGMA RA Risk Analytics, OGMA, OGMA.com,
Yep.
and there's a lot of information in there.
Yeah.
I mean, you put a lot of stuff out there. I'm like, wow, I'm getting a risk education just by reading through the website. Lots of materials, lots of blog, and you're doing a podcast as well. I'd love to show up on your podcast one of these days.
Absolutely.
Um, and uh, and you, and I think you're pretty easy to find. I see your LinkedIn posts almost on a daily basis. I enjoy reading those. But how do we find you other than ogmara.com? Um, are you on LinkedIn, social media? What's the email address? All that stuff. Give it to us. I'll
Yeah.
put it on the show notes and all that
No,
stuff.
absolutely, and
Yeah.
appreciate the promo. So yeah, our website is www.ogmara.com. We do have a LinkedIn page. Not too much socials beyond that, although I've been contemplating Substack. I follow a lot of your stuff on Substack. I feel like,
Yeah.
you have to figure out the best ways to kind of go, where to push content, because I think one of the goals with the blogs and doing the podcast is to drive thought leadership in the industry as well.
Sure. Yeah.
I have a ton of kind of experience in the credit space. I worked at the bureau, for almost 12 years. I led
Yeah.
our research and consulting team there and saw the value of that thought leadership. So I wanted to kind of
Yeah.
continue that with OGMA. And you know that those are great places to go. We have a YouTube channel where the podcasts sit. So if you look up OGMA Risk and Analytics on YouTube, and right now that podcast, so part of our goal this year was to start expanding into the UK and Europe, because I feel that the UK and Europe traditionally have been a little bit more conservative. They have kind of a little tighter regulatory regime, but I think they
Yeah.
could benefit from a lot of the innovation that we see in the US. And so our
Yeah.
goal is to try to bring some of that innovation. And the podcast launch was, we are initially targeting risk professionals, chief risk officers in the UK and Europe, to create a conversation between kind of US and kind of over the pond, to
Okay.
trade ideas and talk about what they're seeing on their side and what are some of the recurring things. And interestingly, it's when it comes down to it, we're seeing a lot of similar type of issues,
Right.
right? Because the math part of it is universal, right? So the way you approach
Right.
risk, the way you think about risk is common. But things like, how do you put together a creative, or what are the regulatory considerations? Those are where a
Yeah.
lot of the differences come in.
Yeah. There's some cultural
And
differences,
cult
right? They,
and
they love door hangers. They don't do direct mail, things like
exactly,
that.
right? Like understanding how the consumer approaches credit and their mindset about credit
True.
is different,
Right.
right? So you have to
Yes.
think about that in product design, or, what kind of pricing model do you need to have for the products you have in market. So it's been
Right.
interesting kind of getting to know some folks over in the UK and Europe, and trading some cool ideas. So,
Yeah. Well, I can't wait to get this podcast out to the audience. Usually we do a pretty a quick turnaround, so it should be on the interweb in the next couple of days. Close us out by telling us. I just noticed you got maybe a Gibson back there. What do you play,
oh,
Matt?
yeah. So the one of those guitars is the first guitar I ever bought. It's a Takamine acoustic electric. I
Okay.
bought that thing when I was 18 years old and started getting into guitar and loved it. And the
Right.
second one is a Koa Wood Martin. Um,
Oh.
yeah, it's
Oh my
it's a
gosh. Yeah.
beautiful guitar. That
Yeah.
that one I acquired post divorce as a little celebration, for making it through a very challenging time. So
Oh my
Yeah,
word. Okay. Well, that's a different show.
that is a totally different
Man,
show. But hey,
that's a different
you know
show.
what? I bring authenticity in all my interactions.
I
So,
love it. My
you know,
God. Yeah. I told Matt, no editing, no cutting.
yeah,
So whatever you say on the pod is going to show up on the internet. So there it is.
there it is.
Matt, I love it. Always been a fan. I'm glad that we stayed in touch for the past 10, 15 years.
Yeah,
For nothing, I enjoyed the relationship. Thank you for coming on my pod, and I can't wait for your book to come out one of these days. And definitely put the show notes on how people can find you, your work with Frank. Speaking of Frank, I should ask him to come onto the pod and talk about
absolutely.
whatever he was doing, right? So
Absolutely.
that'll be a fun episode as well. But thank you so much, Matt. We'll get this out there. Really appreciate your time, and I'm glad we had a shout out to Walt Ramsey. That's pretty cool too.
Absolutely. And thanks, Tim, for your time and
Yeah,
continuing to be an innovator in the space.
I appreciate you. Thank
All
you,
right.
Matt. I'm gonna hit this